Hello friends, welcome back, and we're going to be taking a look at the charts in just a second. But before we dive in, I wanted to say that I'll not be visible during them because for the most annoying, frustrating reasons, my phone decided that I record the videos on to just delete the video that I made of me talking during them as I was transferring it over to the computer. And rather than make the whole things again, I'm just going to put the videos out without the picture of me in them, so it'll be just audio and the charts. I hope that's okay. Thank you so much for tuning in. Like, comment, subscribe, really appreciate it. And also, I'll just throw out a quick reminder to everybody that there's a great video out by TradeSpawn today which introduces risk management, and it's a really great thing to watch if you're new to trading. It might be crucial for you, and if you've been trading for a wee while and looking to sort of, you know, put things into context and why you're bringing correctly for expectations versus odds and things like that, then it's well worth checking out. And I really like the backgrounds in the video too. So I'm going to put this little chunk in at the start of every video today for Bitcoin, Ethereum, ChainLink and Tezos, and if you've seen one video, then you've seen them all. You can skip this chunk, but thank you so much. I really appreciate it, and I apologize for the inconvenience. Hi friends, let's take a look at LINK. We're going to be taking a look at LINK versus Bitcoin and LINK versus the US dollar. That's the Bitcoin charts, what it looks like. That's the dollar charts, what it looks like. Brief first glances and first impressions. What are we thinking here? Well, things have kind of gone along the lines of what we thought they kind of would overall, and this is the play out from the bearish divergence that we saw. We saw bearish divergence between 1, 2, 3 tops here on this time frame. This is the 4-hour time frame, 1, 2, 3, 1, 2, 3, whatever. We saw it across the board there, and all of them we're saying, could that have been the profit taking target up there where that price is? If I could see it properly on the chart, which I can't because it's something hovering in front, 51,000 sort of, was that the price there? 51, 50 to 51, you know, and where are we going next? Well, you know, this bearish divergence is playing out, and where has it taken us so far? That's the question we've got to ask. And we're still looking at the 4-hour time frame, so there's, you know, these unreliable sort of, so to speak, moving averages can give us our first sort of questions. We come down to the 50 simple moving average. It's always a pretty good one. It's a pretty good one to look to, and we're below the 21 currently. Well, we came down to the 21, and when we went down below it, we got off the 2 for 1 sort of, so to speak, as we went down below the 618. We came below the golden pocket here on this retracement here. You know, the golden, I talk about the golden pocket is a profit taking thing, by the way. It's not. Although, you know, it was an area in the past which was obviously going to be significant, which is why we can talk about it, you know, going forwards and stuff like that. And of course, all these things you can draw them on various different ways, and they'll line up with slightly different numbers and slightly different in the same places, you know, depending on what way around you look at the market. But yes, you know, that's where. In fact, let's actually just do that. I just said it, so now I've said it, let's just do it and talk about it in terms of those things instead. Let's take a Fibonacci retracement here. Let's do it from where we had the other one before up to where we now know where our highs were, and stick in this line here. And you can see the 236 coming right in here at what I was saying, this golden pocket area. And can we then think to ourselves that maybe, you know, we might find some support in this area, where, you know, and turn around here because it's the 236 on this Fibonacci retracement that puts it into, this is a better way of saying it than saying it's the 618 golden, you know, and turn around here, we could, you know, and but then if we go beyond this, then I would say that it's quite likely that we'll test this next level down here, which of course then is 50% retracement on those ones, and is the 382 retracement coming up on this particular Fibonacci that we're looking at. So, you know, that would be the sort of the areas to be looking out for. This shape here, if that were then to ultimately become a shoulder and this to be a head, and for us to then have a neckline in and around this area, so we get supported in and around this area at some point, even if it went as far as that 45,000. But if it came down to the 50 simple, just still, or even if this is close enough, it's close enough potentially, and came up again, then came down afterwards, then you could look towards this and try and say, is this some sort of head and shoulders that we've got to go, reversing this upward trend? But overall, currently, you've got to remain sort of fairly positive about this price action, because everything that's kind of happened so far seems to have a sort of cause and effect basis there that we can look to and say, yeah, okay, this is reasonable within tolerance and all the rest of it, and where could be moving next. And you know, upside targets then remain as they were. Of course, if we come in for a higher low, I'd be expecting that to happen in and around about 48,500 to 49,500. If I were you, I'd be looking around there. I'm not a financial advisor, unless financial advice. God, I forgot to say in the last 2 videos. I hope I don't get sued. So yeah, then that would be where I'd be looking to if for a potential, you know, if you're managing your risk and whatnot, and thinking, well, hey, it would be reasonable if people did want to push the price down to do it from there in terms of a lower high and whatnot. But then beyond that, then I'm looking up towards that 50,000 area again, 51,000, and trying to make higher highs. And if we get up above that area and get a proper upward trend on the go, then we can start looking back towards things like the weekly chart here, where we can say, look, this is a previous weekly high. We want to be above that at 50,000, essentially 50,445. And we don't want this to turn into a lower high on the weekly time frame. You know, we don't want this to turn into a lower high on the weekly time frame. We want this to just be overall, to continue our overall upward weekly, just shrink this down a bit, overall upward weekly sort of trend that we've got here. We want that to continue. We don't want to see the prices coming back down too much as part of this sort of little correction on the way up to going above that. So that's when these things start getting a bit more crucial. If we do go up to 51,000 again and able to open and close daily time frames up there, and if that day happens to be a Sunday over to Monday, all the better for it. Then we could be looking towards these higher targets again, and we'll revisit the charts then soon. Don't worry about it, we'll be back. Let's go take a look at the LINK versus US dollar prices. Now, where are we currently? At $3.17. You can see the price here, a bit ahead here, 317, and the weekly chart's the same story, right? Same story there. It's a weekly chart. Go down to the two. You know, it's got looking at the moving averages here. There, the Fibonacci retracement line is 50% there. You know, looking down here, you got the 50 moving average in there. If you were to go down to the 618 of this one, then you know you'd be looking at a retracement, correction coming in here. Of course, if we go body to body on this and draw Fibonacci in, you can see the 236 coming in right there at $3.15. And if we do the same thing body to body, pardon me, the 236 is just below this 50 simple at $3 itself. So those are two levels to the downside that I'd be looking for turnarounds at. Should we not get one there, then of course you've got the 21 as well at 286 coming in there, and that would be the next area. And if we go beyond that, then things are feeling pretty poopy overall. But then we could continue this upward trend, even with that a higher low coming in anywhere as far as 230. You know, so be careful, volatility is out there, it could happen, but overall what we want to see happen really is the prices go up to that 370 area. You know, crazy percentage differences between all these, you know, the today's candle, for instance, there you got 10% on, or that's 2-day chart, sorry, well over the last 2 days you've got that 10% anyway, and today's candle, of course, wick to wick, looking at 7.5%. There's loads of volatility here. Basically, I'm not financial advice, no financial advice, but just sort of, you know, take things little by little, sort of careful, easy does it, nice and easy does it. Overall story is just the same really between the two different charts here, and could you know, in terms of the oscillators and how things are doing, they're not doing badly. You know, everything's fine in terms of this overall upward trend that we could be experiencing. We're above the 50 here, simple moving average. We're above certain areas that we've been looking to. We're above all the major moving averages. There's sort of little crosses happening. You got the 21 and I don't know, you probably can't see that on your screens at the minute, but you've got the 21 and the 55 just wanting to do a little cross at the minute, you know, like that sort of thing. I use 55 on that. You could be using 50, and you could be saying, hey, look, they're just on it right now. Very little, you know, when you talk about moving average crosses, though, I don't think that they're necessarily the activation, hit the red button. Yeah, anyway, I think that kind of brings us up to speed. I don't know if I'm being too vague in these videos. Let me know if I'm being too vague. I feel like I'm giving you everything that you really need to know to sort of give you the toolkit to go ahead and make decisions that are off your own back. Now, my number one piece of advice to anybody trading ever is always to develop your own trading system, your own strategies. Of course, you're going to be looking at the same charts as everybody else, and it's the same, you know, you might have your colors slightly differently, but then the positions them are going to be the same, and the sizes and whatnot, you know, obviously you can change the scale, but the information that we're looking at is all going to be the same. So coming in here daily, checking in with me, having your technical analysis, getting a little bit of a soundboard and a couple of different ideas. Maybe you've got your own completely distinct trading system, and it's just nice to have a radically different outlook. Maybe you've got similar ideas and you're looking for confirmation or validation or whatever, you know, it might happen to be in terms of your own ideas. But the number one tip is obviously develop your own trading system, and you will do really well. So over the longer term, because you'll be able to iteratively improve on that. So of course, and in terms of that sort of thing as well, I'd highly recommend watching the video that TradeSpot put out today about risk management. It's an introduction to risk management, sort of expectation versus odds. So go ahead and watch that. Thank you so much for tuning into today's video, and I'll catch you in the next episode.